going to be basically showing you information that you truly need, right? I'm not going to be showing you what this is and what that is. Why? Because on the internet you see 95% of every, of so many things, and you realize in the end, simplicity was enough to become profitable. And the best example I can give you guys is this. Suppose you're in primary school, kindergarten, whatever, and you start moving up to, the new years that come. You start moving up to high school, college, you get graduated, university. And then imagine in the end, you realize after you get your PhD or your master's, that primary school level education was enough to become successful in the trading space. And that's what it truly is, guys. I've got gold as the example. And before I get started, guys, why should you believe me, right? Why should you take information from myself? Because the most important, what I believe is important, is merit, is credibility. And the only way I can show you that, guys, is if this works for me and others. And I'll just start from this, guys, right? This is my obviously my mentorship group. Now you don't have to join. This isn't a sales pitch. You do not have to join, right? We're up to about 1100 plus members. But what I'm showing you here, guys, is passing prop firm challenges with different prop firms, FTMO, the most notorious. And I'm doing this, guys, with low risk, and I'm passing these quite comfortably within 1-2 trades, few trades. Some obviously a little more than 2-3 trades, but I'm passing them within 1 or 2 days, right? With low risk, not with huge risk where you see on the internet. And not only me, guys, my students are also doing this. Now, if I also show you something else as well, and you see me posting videos, the ones who consistently follow my videos, I'll be posting videos where I trade live as well. I show my live positions where I'm passing these phase ones. There's recently a video I posted where I pass multiple prop firms within 4 days, low risk, and I'm again comfortably, right? There was another video I uploaded. Let me see if I can find. Oh, there it is. One of my students was number 4 on FTMO's leaderboard. He was only 1% behind the number 3 ranking individual. But I obviously, he was wise enough to realize, enough's enough. Take out the money and just run away with it, right? But again, so it's about, obviously that was important in my eyes to show you that, because I'm a 700k funded trader. But it's like, why watch this video? It's like, me personally, obviously I'm not showing my broker statements. I don't show my payouts. My students, everyone else in the community are aware of this. I'm a bit very private like that. So I like to think, I don't want, it's none of anyone's business how much I earn. I'm not a flashy individual. I don't show Lamborghinis and big mansions, but I do make this work, guys, right? I have simplified trading, and that is even the core, even the name of my Discord group, Simplified Trading. Now we're going to be starting with obviously, a bit of introduction of myself, how I got into trading, what I did before trading, and I've worked at KFC, guys. I've worked at, I worked with the police, CCTV. I've done door-to-door sales. I used to even set up stalls, at the age of like 16, 15. So I've done drop shipping with Shopify. I've done it all, guys. I've literally done it all. I've done Amazon FBA. I've done eBay, until PayPal shut me down. I mean, you can even check your reviews, not the best. Now, eventually, I decided to find a way to make money, guys, where a third-party provider does not have access to my funds. And the best way I found that out was, with Forex, no one has control over my money, right? So this is going to be by far, and this is an introduction. You can skip ahead as well, guys. This video is going to be in chapters. Again, cutting out all the BS. I'm going to be only showing you information that is going to be, how can I say this? The only information that you're going to be that is necessary for you to become profitable. I'm going to be breaking down candlesticks, everything, the chapters, everything, the strategy that I personally use, everything, guys. So without wasting any time, let's get straight into this, guys. Now, starting off with the number one question, right, that basically pretty much every beginner asks. Now they ask this, now I've asked this myself. Now we asked this question in the beginning, right, especially if you guys are, who are actually beginners at this moment of time. What is Forex trading? What is trading, right? my own my youngest brother, he used to think trading is a scam, right? It's not legit. Why? And I don't blame him, right? I didn't blame him at the time because lack of knowledge. And normally you just think, why is there going to be a huge ocean of money and someone just going to give it you, right? I mean, where do you even take that money from? Where did that money come from, right? Now, there's two answers to this, right? Again, coming back to the point of the video, my thumbnail, cutting out the BS. Now, there's two answers. One, we can just go on Google, right? I mean, I can just go into super detailed and boring, give you a boring answer. Or you can just go on Google, ask, basically Forex trading is the buying and selling of currencies in the global market with the goal of profiting from exchange rate fluctuations. Traders use the market analysis to buy or sell currency pairs through platforms, right? There's obviously risk, that's involved. There's profitability if you know what you're doing. And then, so to get started with Forex trading, you can decide how you'd like to trade Forex, learn how the Forex market works, open a trading account, building a trading plan, choose your Forex trading platform, place your first position, your first trade. Now, that's the boring answer, right? Now, I want to simplify this for you as possible. Now, if I had to, and the best way I can do that, guys, and trust me when I say this, the best answer I can give is if I was to, if like a 5-year-old or a 10-year-old was going to ask me the question, and how would I answer, right? The best way I can answer this, guys, is all you got to think of it like this, right? There's a huge ocean of money, liquidity, a pool of money, right, floating above your head, whether you want to call it Wi-Fi money, whatever you want to call it. And we basically, it's going to be a battle of, even if I show you here, this is a watch list of all my currency pairs. Now, obviously, I'll be breaking down, how you can get access to TradingView, how you can, this is where I'm using a platform called TradingView. I'm going to be going into that as well later on in the video. But if this is basically, so let's click on, if I just show you GBP, JPY. So in this instance, even if we looked at, let's just say Euro USD. Now, Euro USD is the most liquid currency pair on the market, right? This is the euro versus the dollar. So there's a bit of a battle going on between these two, right? If some simple, I want to make this simple, like I'm speaking to a 5-year-old. If something terrible happens in the US, or if some news releases negative for the US, let's say, for God forbid, an earthquake happens, right? High super probability chance the dollar is going to collapse, right? Well, in this case here, this is euro, right? So let's pick another example. The dollar would weaken and the euro strength would increase. That's why here, so whenever you see these bullish candles pushing further up, and I'm going to be breaking down the candlesticks, how they exactly work, everything. But you got to think of it like this, right? If the euro is something's good happening in euro, then the euro is going to go stronger. If something's terrible happen in the US, the dollar is going to become weaker. Now, just like this, obviously here, look at this. This is the date, Wednesday, 18 December. You can see the date at the bottom. This particular time, either it's a news release, something's happened that is not favoring Europe, right? The dollar has tremendously increased in strength. Something has happened that's, great for the US, where the, euro has just absolutely tanked. And if we went on, and at this particular time for another currency, about USD, JPY, I'm sure at this particular moment, not as maybe as this, how much this has tanked, but the dollar must have just spiked up if you're matching the dollar compared to another currency pair. So the simple way to answer this, guys, think of it as a battle just going on between the two countries. And if you get a lot of green candles, which indicate good, like, buying the mark price, the currency is going stronger. And if you get red candles, you see, the market, the price weakening of the currency of that particular country. So that's basically the simple way to explain, and to say what's overall the answer to what is Forex trading, guys. Just think of it like this. A huge battle is going on between the two countries' currencies, and whenever you look at this and you can see these, these numbers here on the right here, this is basically the market, you know, exchange rate. And you can actually see right now, if I was to go to the walls all the way to the right side, and obviously euro is just collapsing right now. The euro is becoming weaker and weaker, and obviously right now 1.02568, right? This is the exchange rate, and you can actually, obviously there's different brokers, guys, and we're going to be breaking down that as well. But overall, as you can see right now, who's winning the battle right now is, you know, the dollar is winning. Why? Because euro is on the way down. And yeah, so you can just basically, overall, again, my answer is just overall, it's a battle. What is the Forex market? Simple terms. You can obviously go to the more, you know, more in depth, more complex, more, you know, which normally leaves a lot of people more questions. But in simple terms, you know, what I've seen with my over 8 years of trading experience is just a battle going on between the currencies, from one country to the other, you know, versus the other. And you know, it's just a tug of war that's happening. Okay guys, now in this chapter we're going to be speaking about, which is the lifeblood of the markets, which is, you know, some people say obviously liquidity, volume, which, you know, they are correct, but this is basically what we see on a day-to-day basis. These are the candlesticks, and how do we actually read them, right? I like to think of it as, you know, candlesticks are more like, you know, the alphabet, and each candle represents a letter. You put the letters together to make words. And even when you go to school, guys, right, kindergarten, primary school, nursery, whatever you want to call it, the teachers teach you in letters. They don't just throw you straight away into, you know, put paragraphs together, right? Write down a story straight away. No, you have to learn the letters, and that's what we're going to be doing in this video. How, obviously, again, you know, and we'll be cutting out all the BS. You know why? Because I can go on about this all day long, right? I'm gonna be going in, you know, how I look at candlesticks, how I read them, how candlesticks were able to make me a 700k prop firm funded trader, how I'm able to help so many people on a day-to-day basis, make them profitable. And this is how I look at candlesticks, and then I'll be showing you guys, you know, how you should be reading candlesticks as well, right? Because there's so much stuff on the internet. But trust me, this is obviously what you're gonna, if you went on Google right now and you typed, you know, how to read a candlestick, you know, this is what you would see, right? This is basically on a day-to-day basis. If I go on here and we zoom in on these candlesticks here, right? We see, you know, you see these wicks here, you see these bodies, you know, you see these rectangles colored in red. And, you know, this basically means obviously market is going down. You can have customized colors, but what you see on a standard day-to-day basis is red, which obviously signifies, you know, market is pushing down, and you know, the euro is becoming weaker. And obviously green signifies, you know, that the market is bullish, the market is moving up, the price is going, euro is becoming stronger, in simple terms, right? So let's just start with, you know, how to read a candlestick. So whenever you see a bullish green candle, how would you read this, right? The simple way, well, what this picture is saying is, if you look at the bottom of the body, this part here, this is where price, the next candle, well, in this case, this particular candle opened from, right? It opened from here, the market started from here, and then it was just pushing up and down. Now, the best way I can show you this is if I go to a live candlestick that's moving currently at this moment of time, and I'm going to go to a small time frame, right? As you can see here, this one's moving. If I go to a small time frame, because you're going to see it more in action, right? So let's go on a 1 minute time frame. So you should see it move. Now, obviously, because it is later on in the day, it's about 4:30. You can see it move. Okay, perfect. It's moving. Now, where do you think, guys, this candle opened and closed, right? Here, let's mark this as we go along. So this of the previous candle was the peak of where this candle came to, right? If I get this line over here, this was of this bullish candle. When market came down, it started pushing up, right? But it didn't just start over here and push it itself all the way to the top and close here. No, it started jolting. And this, obviously, we're on the 1 minute. So each candle represents 1 minute of data. It gets printed after 1 minute. Here, it takes 5 minutes to print the candle, 10 minutes, 15 minutes, so on, so on. Obviously, we have the much bigger time frames. Now here, guys, is, you know, the peak, the highest point of this candle, the bullish one, right? Then obviously when the candle opened, where do you think it opened? It opened here, right? This red candle, it opened here, because this is where the green candle closed. I hope that makes sense. And even if I was to go to this picture here, opening, where this arrow is pointing, is the bottom here of the rectangle. Top of the rectangle is the closing of the green candle, right? The red candle, whenever a red candle forms, but you got to understand where when it closes, the top of the rectangle, right, is the opening, the bottom is the close. These lines, these wicks, they call wicks because they're like the wick of a candle. That's what you see called candlesticks, but these are the wicks. This is the highest point that the candle was able to go to, and this is the lowest point, vice versa onto a bearish candle, a red candle that indicates a, you know, trend or a price that is moving lower. This was the lowest point and this was the highest point. The difference between the two candles, obviously bullish market was moving higher, bearish candle market was moving lower. Now that's what you're going to see on Google. Now how do I see this in simple terms? If a 5-year-old or a 10-year-old was to ask me, you know, how to read this, what I would say is focus on the present candle and you focus on where did it start from. Again, top of the rectangle would be this part, so of the red one. So the red one tells me this is where it started from. The bottom of the red candle is where it closed, right? But if I look at the wicks is where it was the lowest point it went to. Now it closed here, that's why the next candle opened here. It doesn't matter where, if it closes bullish or bearish, but the next candle has to open from the red one where it closed. I hope that, you know, makes sense. Now obviously, depending on, I'm going to be, obviously with candlesticks, guys, there's different types of candlesticks too. Now this is obviously there's different types of candlesticks, there's different strengths, and this is an indicator that would even tell me the strength of the candlesticks. I'm going to be going into the TradingView where I do my chart analysis section. The different indicators you can use, that's going to be, obviously you can skip it to that chapters. Obviously this video is going to have timestamps, so you can just check, you know, these are different time frames it takes for each candle to get printed. So you can see the strength of this one is 96% bullish, you know, 75%. You can see the strength of this bearish candle. So this one has more strength than this one. And if you see, obviously this one 44%, this one 98%. But does the market, you know, actually go in that direction? No. Why? Because if you look at the overall direction, you know, we're moving downwards. So even if this bullish candle was 98%, we're still pushing downwards, right? Because it's going to take a lot more to send the market back up again. I'll give you an example, right? I'll give you an example. If suppose someone weighs 50, suppose weighs, let's just say 50 kg, right? Someone suppose weighs 50 kg and he or she is standing on the ground, and I tell you to pick them up, it'll be easier for you, right? It shouldn't be that difficult for you. But suppose if now this person jumps off a 2-story or 3-story building, and then I say to you, now catch that individual, even though that person, you won't be able to catch them, obviously. More than anything, that person, once it lands on you, you're going to injure yourself, you know, quite significantly. Now, but then if I turn around and say, wait a minute, why did you not catch it? I mean, you lifted them off the ground when they were, you know, still 50 kg. Even when they jumped off the 2-3-story building, they were still 50 kg. They didn't become heavier. Now, what is the difference though? Right? The difference is, on the way down, they gained momentum. They gained, you know, in this trading term, they gained volume. They gained more speed. So to catch them, even though we see a 98% candle here, guys, to catch them now on the way down, they're going to hit you like they weighed 150 kg or 200 kg. So to catch them, what I'm trying to say, guys, is it's going to take more force to catch them, right? What I'm trying to say, it'll be easy to catch that individual now if you had 4 or 5 people waiting at the bottom, because you got more muscle, right? Just like that, on the way down, when this price is gaining more volume, more speed, now it's like, we need something crazy to happen to send the market in the opposite direction and set a new trend, right? For the markets, the buyers to start for this to run bullish, we need something crazy to happen, right? So not crazy, but like we need something big to happen. A little candle of 98% is not enough to battle, you know, something that's been coming down for such a long time. If this little candle here, the strong candle here, formed while the market is moving sideways, then it's have more impact. But something that's coming down with a lot of velocity, a lot of speed, I hope, you know, it makes sense what I'm trying to say, guys. But that's about candlesticks and how to read candlesticks. The next chapter I'll be going over, you know, the different types of candlesticks and what power they hold and what you need to be looking out for as well. Now, I hope obviously you know how to read a candlestick basically on basis of strength, you know, and if I even show you guys, if it closes at the top, if the candle closes at the top, it means it's a strong bullish candle. And if it closes at the, let's just say, if you know this bullish candle, if I just put this here, if this red candle closes at the bottom with the minimum wick, this signifies a super strong bearish candle. Sellers are in full control. Like this is a perfect example here. The wick is at the top of this bearish candle, and this candle here, you know, look at this, there's hardly any wick of this red candle. Now this obviously means it's a strong candle. Vice versa, this bullish candle over here, if the wick is at the bottom and there's hardly any wick at the top, this means this is a very strong bullish candle and the buyers are in control. Now obviously the next candle, again we see the long wick at the top, and the body of this candle obviously is a red and with hardly no wick at the bottom, which means the sellers are in control. That's why you see the market just pushing further and further down. Now the way I would look at it is like this, guys. Once one candle forms and the previous one shows that the buyers are in control, this candle is stronger. And even if I actually show you by turning on the candle strength indicator, which don't worry guys, I'll be showing you when I show you how to download TradingView, everything. I'll be breaking down the indicator that I personally use, that have made me get 700k funded, and I make profits from the markets on a day-to-day basis. So I'll be showing each one. So here 98%, look at the strength of this candle, and this bearish candle is 98%. But what's the difference? This is 98.13%, this is 98.52%, 52% is stronger. And obviously combined with the trend on the way down, volume, momentum, that's why market just pushes further and further down. But this signifies that because this one has formed, this one loses its value now. And obviously if you compare this to this one, it's got no value anyway, because look at the size difference. The bigger the candle as well, this will also tell you which one is in more control, which one has more authority, right? It's like the animals in the jungle. What is a mosquito compared to a lion or an elephant? Look at the size difference as well. Size matters, it's it indicates volume, right? What is a river or a stream compared to the ocean? I mean, they both basically are liquid, water, if you want to say, so the same thing happening here. But when you look at read the candle bodies, what is this small little candle compared to this huge bearish candle? And obviously if you look at this one, you see this small bearish candle, red one here, it goes bigger and bigger and bigger, right? So let me just turn this off so you can see more clearly. Here, small red candle, bigger, medium size, and then even bigger, and that's why you see the market just pushing further and further down. Our job is obviously to see now where market, in which direction it goes, and from that we are able to pull money from the brokers, and yeah, that's how we just make our bread, so yeah, this is basically the strength of the candlesticks. Now if I to look at candlestick patterns, now that what I just showed you get there, guys, are the letters, right? It's how to read candlesticks. Now if I show you on here, now this is, again, I want to be cutting out all the BS, cutting out all the fluff. When you go on the internet and type in candlestick patterns, what patterns to follow, and this is what's going to be basically your entry signals, right? This is going to be entry signals when to enter the market. Now you see all these different candlestick patterns, right? So if I just do, and if you go on Google and type this in, you'll get all sort, whenever this pattern forms because trading is pattern recognition. So in a simplest form, so whenever you see, you know, candlestick patterns form, whenever you see this particular one, a red candle forms, then a little tiny little doji candle, you know, and then you see a green one, take a buy position. When you see a green one, then a red one, then you take a sell. You know, this is all confusion, right? I've tried out all these, pretty much 90% of all these, and now I want to be cutting down, guys, to which ones you should look out for and what I look out for as well, right? Because it's going to be cutting out all the fluff. And this is why because there's so many videos out there on for beginners, but how many videos actually out there, guys, where someone's saying, actually, yeah, this is what trading is for beginners, but at the same time, please don't do this, because this is just going to put you in you're going to become a hamster on a hamster wheel and just running in circles but getting nowhere, right? And so out of all these, what I can see, I'll tell you which ones you should be looking out for, right? And let me just show you why I personally use. And from this, what I can see, guys, actually, this is, except for these two here, this is more than enough, right? But I still want you to only pick one or two maximum, right? The bearish and bullish engulfing is a beautiful one, and the bullish pin bar and the bearish pin bar, the hammer candle, whatever you want to call it, that is all you need. These two here, I personally don't use them. These two and these two, the bullish pin bar, the bearish pin bar, and I'm going to be giving you live examples too. So let's say, for example, let's go to a different chart that I was using for the example before. So let's go to a live, you know, there's different patterns, like we say, putting the, you know, alphabet together, but now this is coming back to gold. So these were winning positions, right? So let me remove this. So as you can see here, guys, huge market drop from here. Now look at this, guys. Do you see something in resemblance? Look at this evening star, the one I mentioned I don't particularly, you know, obviously use. Look at this. Let me move this out of the way. Let's put it down here. Look at this pattern. Look, pay attention to this pattern, guys, right? Let's change the color of this so you can see more clearly, and I've just colored it purple, which obviously is more difficult to see. Let's color it. Should we color it orange? Yeah, let's keep it orange, a bit bright. Okay, so a green candle, a small little green candle, which signifies, remember, if you read the wick, there's more wick at the bottom and there's a little bit of a wick at the top. So and look at the size of the body of this rectangle of the green. That buyers, when they come to this area of interest, I'm going to be breaking down how to draw zones as well, so don't worry. When price comes to this area, it goes weak, and then this bearish candle, huge bearish engulfing, but it forms this pattern. If I bring you to this one here, you see this pattern here, the evening star pattern. You know, some people call it evening star, and some people call it the dark cloud cover, but obviously it's an evening star here. A green candle, a weak small bullish green candle, and then a red candle, which signifies the market's going to go down. Vice versa, a bearish candle, and then a small little volumes decreasing of the sellers, the red candle, and then bullish candle forms engulfing. Engulfing meaning, you know, it's engulfed the previous candle, which means, in simple terms, this green candle is way bigger, like 2-3 times bigger than the previous red candle, right? So we go to the market, look at this. This on the way down. So you can take your pattern from here. Now, me personally, guys, I don't like this pattern, right? And I'll be going over why. I've backtested this. I've collected my data. It works. It works. It has less, you know, what I've seen, chances of winning than previous patterns. See, this is what I like. This is, you know, if you go to a smaller time frame on the 30-minute, this is an engulfing pattern, what I mentioned earlier, right? This bearish candle is much bigger than this candle than the previous bullish candle, right? But let's go on a small time frame. Let's see again. Look, what do you see here, guys? Remember, a evening star pattern has formed again. So depending on, again, backtest your data, guys. Your backtested data could be different to mine, and then obviously we still get this winning trade here. Now someone might say there's a bullish engulfing this green one above this red one. Why not take a buy instead? Well, that is going to be a section I'm going to be covering in the, you know, strategy that I would also like you to try as well. That's worked for someone like me. You know, it's a bullish engulfing, yes, but then it's formed at a zone, but this has formed below the zone, right? It's a resistance level, so it has no value. if this bullish engulfing had formed, this green engulfing had formed above the yellow zone that I've marked out, then you take a buy. But in this case, you know, it's an evening star. We push, the market pushes further down. Let's see if there's any more clues. Let's see if there's any more. Bearish engulfing. Okay, perfect. Look at this, guys. A super strong bearish candle here. No wick at the bottom. Well, if you watched, remember me speaking about, you know, look at this individual. You can take this trade of this individual candle here alone. And then long wick at the top. Small body. You can take a sell. Now let's go on a much smaller time frame again. Now for entries, guys, you want to make sure you stick to one time frame. Don't start taking all these entries. No, one position. Now we go to a smaller time. Now we're getting multiple confluences, multiple, you know, signals. One, bearish engulfing, right? Another one, look at this bearish long wick rejection, single candle on its own. Another one there, right? That's two altogether. And then look at this, a bearish evening star pattern again. But you want to focus on one, whether it's a pin bar, whether it's an evening star, whether it's a engulfing. Focus on one. These three are the best ones that you can use, guys. Out of all this garbage and nonsense here, I'm sure they work for others, but what's worked for me, and trust me, coming from someone with years and years of experience, 700k funded trader, I don't want to keep saying it, sound like I'm boasting, but it adds credibility to what I'm saying. You're right. You see all these other videos out there, but no one really, you know, shows. I show live trades, guys, on my channel, right? I show live trades where I show live passing profit challenges within a few days. Within 1 or 2 days, with, you know, with the high win rates, with high, you know, risk rewards. So trust me when I say this is what the patterns you want to be looking for. People will sell you this in courses, right? I'm giving it out for free. Trust me. You can backtest this and you'll see the difference as well. So these are the candlestick patterns you basically want to be looking out for. So now, basically, yeah, this is on candlesticks. I hope you found value from this. And now let's move on to the next chapter. Okay, guys, for this part of the video, I'm going to start bringing, obviously, coming in front of the camera. Why? Because of copyright. Don't want any copyright strikes on my videos, just because of if I start showing prop firms, etc., MP5, how to use these different kind of brokers, then YouTube, you know, it takes it quite seriously. So for that reason, it's okay if I come in front of the camera, then they don't really mind, because then they take it as if I'm just reviewing, right? Okay, so as I mentioned from the previous chapter, this chapter is going to be about how to draw zones. I'm going to delete all this, right? What are basically zones? Zones are areas or key areas of interest where market, once it reaches that point, it should give us some kind of a reaction, some kind of a, a rejection, or just break through that area, and price should continue heading in that direction. So first of all is how, again, I'm going to be showing this as if I'm showing to a 5-year-old, 10-year-old, right? So there's a simple way of doing it. One is you can look at this and put as a line chart by clicking on, you know, this line. It gives you this feature here. And what it basically does, guys, you can mark out the sharp points where market reverses from, right? So let's just say if I was to grab, let's grab a zone. Now let's mark it like this. And why have I marked it like this, guys? Right? Look at this. Sharp turn here. A sharp point here. Look at this, like these knives, right? These sharp edges. Another sharp edge over here. Another edge sharper over here. So now that's one, right? Because if I look at the past data, market has shifted from that area. Now, zones are different things. Obviously, I can go on Google right now and you can, you know, go into multiple, you know, examples. But again, this video is about cutting, again, I'm saying it again, it's just cutting out all the crap and how I draw zones, how to simplify it. Now, obviously, the strategy I'm going to be showing as well, it's, you know, you can use this for you particular, but I use a break and retest strategy where price obviously touches or breaks the level, and then, you know, I take the entry from there. So look, if you look at these sharp points, and that's where I'm basically just drawing my zones from. If I was to grab this one again, now this is baby level, right? This is, you know, simple, not baby level, but simple. And the best way always is going to be, guys, if you draw it from your candlesticks. But if you was absolutely beginner, which I'm guessing you are if you're watching this video, this is going to be by far the most simple way to do it. Now, if I change it back to the candlesticks, you can see where the zones have been drawn from, right? The zones, basically the sharp points, whatever you want to call them, market, you know. Now this alone is not going to be making you profitable, right? These are areas of interest, and I'm going to be going over how you manage risk, how to, you know, how to place your trades, everything. But this is obviously, you know, I'm going to be also showing the art of losing less and winning more. I made a separate video for that. I'm going to be going into this as well, because obviously the main game of this, the concept basically is, guys, winning more, losing less. So now we've got these zones marked out, right? So now we've got to find a strategy based around this, but we're going to still be focusing on the zones, right? Now if I was to draw this again from, you know, looking at only what I see from, so this is gold for the example, I can see clearly here over here, guys, that here is a sharp point where market comes down and there's a U-turn, and the market from here falls from this point. So wherever you see major moves or major U-turns, right? Again, I was trying to simplify this because there's so many examples online how to draw zones, and trust me, 90% of them are just absolute trash from my experience, what I've seen. And this is what actually led me to become a 700k funded prop firm trader. So trust me when I say this, guys, this method will definitely help you. So what you can do, guys, is just basically drag this across. So this was one point where there was a U-turn. This was a point where there's a sharp drop, and then obviously that's why, guys, you see market coming up here and you see some kind of a reaction, a rejection if you want to call it. Price comes up again, we see a rejection, and it pushes further down. Market comes back up. Now I'm seeing a resistance rejection, but this time price breaks above. But what's the difference this time? When price breaks above, it comes down to retest, to recheck, and that's what you call the break and retest strategy, which I personally use and my students. And obviously it's a more refined version. The exact method that I use, I only show to my elite mentorship students. If anyone is interested, link will be in the video description. But unfortunately, I do not work with beginners because that would be, gain a bit of experience, and I only work with experienced traders. So price comes down, touches my zone and spikes up. This alone, guys, let's see how much we would win from this, right? We run about 200 points is normally the average I like to use with gold, and 1 to 10, guys, insanity, right? And even if I was making this nice and comfortable below this wick here for the stop loss, 4.7. I'm going into everything. I know probably at this stage you probably don't know what this means. I've got this the other way around first of all. So yeah, 1 to 4, so a nice profitable trade. So again, zones, you want to practice this, backtest this. This is how you, there's no rocket science. I don't know what more to say about zones. You know, if I was to even, people normally think, okay, you know, you got to be like, it's a hidden secret how to draw zones. Once I know how to draw zones, you become a multi-millionaire. I can print this in a news article, and yet it will not make everyone profitable, right? There's different ways of doing this. I'm going to be speaking about edge as well, you know, different things you can apply that can give you an advantage over the market. But this is the most simple way to draw your zones. I hope you found this helpful. Let's move over to the next chapter. And if you're still watching this, guys, huge props. But I'm going to be, the gems are still more and more, the nuggets, golden nuggets are yet more to come, guys. Okay, guys, now you see me do my, you know, all my chart analysis. Now you're probably wondering, what is this platform? Where am I doing this? You know, so basically if you go on Google, right, and you type in TradingView, it's called TradingView, notoriously known across all kinds of traders, whether you're trading stocks, options, you know, crypto, it goes on and on. You know, TradingView is well known out there, right? It's so when you type in TradingView, you're gonna get, obviously you're gonna get brought up to this. Now you want to click on, again, you got all these different options. You can check out markets, news, brokers, you know, but you want to click on super charts. That's where I click on straight away. Now obviously you're gonna need to make an account with these guys. Very, very simple. Now if I just click on it, it brings me here straight away. Why? Because I'm already signed in, I'm already a member. And it's, even if you look at the pricing options, I mean, I've got the premium package, but if I show you, let's see, where are the account I'm billing. So if I've got a premium package, which is around £70 a month, but You can even go, you can even get the free package. The only thing is you get adverts and all that. If but the most simple basic package you can get about £15 and about £25 and up to £70. So basically that's how it works. Now what I want to say, guys, is once this is a tool and a platform that is so helpful and it's just user friendly. You've got all, obviously you can see here all my tools here. I've added them to my favorites, saves me every time coming down here. And you can have all the time frames. You can be at the top. You can add in time frames, whichever one, candlesticks you want to see. You can add in indicators, which obviously I've already added in. I've already got these templates saved here, engulfing combos. This is everything I've tried, guys, and the list just goes on and on. For example, I'll give you look at all these favoritize, all these stars, yellow stars. This just gives you an idea of everything that I've tried out in the past. I don't use all these. Now I only use 2, candle strength and the sonar sessions indicator, which basically just tells me this still 1 minute, make it more simple for you guys. This basically just tells me, guys, what time, what session I'm in, right? If I'm in London session, which is highlighted in blue, and then New York session, which is highlighted in yellow, and then Asian session, which is highlighted in red. Now this is basically just more simple way is your times of the day. London session starts at 7 AM UK time, and then overlapped then by obviously New York session, which normally starts around 12 12 PM. And basically that's how it just it gives me an idea of, I mean, not that I need to know, obviously I could just look at the time if what session I'm trading in, but it's just nice to visually see, especially helps with backtesting as well. So that's basically, this is a super simple platform, very affordable, and it's the most premium platform out there by far, the most simple and definitely the most accurate, I should say as well, when you're comparing to your brokers. So this is basically a platform called TradingView, where you can just sign up. It's free as well. You can do your chart breakdowns, and then you obviously you move on to your broker, and that's the broker is actually where you place trades, and I'll be breaking down that too. So yeah, again, definitely check them out, guys. And I mean, you could even, if I even show you here, guys, got many options. I mean, hundreds if not thousands of different options. It gives me a chance here even to do replay mode. I can check in the past how price could have moved. If I press play here, I can anticipate and see if my backtesting data was correct, and then once I gain the confidence from here, I can move. I mean, these are by far, right, the most powerful features. And again, cutting out all the BS. What do you really need TradingView for? Backtesting, number 1. Number 2, obviously, well, number 1 actually is doing your chart analysis, checking out the markets, which direction it possibly could go. For me, number 2 is then backtesting. Number 3, obviously, you got all these tools you can add. I mean, this countless goes on and on. All these different charts you can break down. If I just move this to the side, I actually want to make this a bit smaller because I want to focus on the charts itself. So not on my face, but you need to focus on this. So this goes on. I've got many currency pairs on here, which I just continuously monitor. So basically, yes. So that's basically the idea behind TradingView. You can check out the reviews. The number, in my eyes, number 1 in the world. So what I personally use and one of my students use on a day-to-day basis. 100% recommended. I mean, I think they're worth a few billions anyway, so they're definitely doing something right. Check them out, guys. Super easy to set up. You can even change the colors of your candlesticks. So here, if you go on here, you can change, for example, candlesticks here. I've done red and blue. But normally, what my students normally see, and is I normally have it like this, blue and black. I mean, I'm just used to it, been doing it for years. So, but yeah, you can customize it to your own version, guys. So many, again, so many different options and features on here. It's absolutely insane. So yeah, check it out, guys. Let's move on to the next chapter regarding the brokers and who you can trade with, guys. Okay, guys. Now, we've gone through TradingView charts. Now we've gone through basically candlestick patterns, candlesticks, the strength of the candles. We've gone through trading, I mean, pretty much the more simple stuff. Now it's going to be like, okay, you might be wondering, we've gone through pretty much the foundation. Now what do we do now, guys, that where we can place a trade? So that's what we're going to go through this chapter, right? So this is not where you place your trade. This is where you just do your chart analysis, your homework, where this is your science lab. what I like to call it. This is basically, guys, where you're gonna come down, put your thoughts, where you're gonna try to put your analysis down, and I mean, you even see this here, right? Zone that I drew, and then price now, well, as you can see, it reacted nicely, came down, touched nice on its way up. Obviously this can still be a losing trade, but just an example, right? For an example, so I mean, you can even see here, guys, these prop firm certificates that I mean, if you even at the beginning of this video, I've shown countless certificates. I've actually got 3 times more, actually probably 5 times more than what I actually show in my video intro. But some of you can see the prop firm I'm passed with. This is a 100k certificate with Funding Trading Plus, Funding Pips, Alpha Capital Group, and obviously even in the got FTMO, Maven, you know, Funding Next. It goes on. Now the point I'm trying to make, guys, is where do I actually place all these trades, right? Once I've got all this, now what you want to do, guys, this is with the most important part. You can go over to Google and type in what you might already know as MT5, MetaTrader 5. Type in Google and just click on downloads for MetaTrader 5. Now this is going to be a broker, right? This is where you're going to be placing your trades. Now this is an option 2, CTrader. Type in Google again, CTrader, and you can type and you can just sign in, create an account, download it onto your PC, which is recommended, not on your mobile phone, on your PC. If you want to treat this trading as a business, only do this on your PC. Once these two, whichever one you choose, are downloaded, guys, then what you want to do is, if I open it, click on MT5 here. This is on IC Markets, one of my accounts where, you know, it's clean. They're my personal accounts, but I don't keep any money in this account. And what you can see in here, guys, this is MT5. This is now your broker. So on your broker, you know, it's again, super simple. You can, there's probably going to be so many videos on the internet where you can just, you know, watch what each and every little thing does here. Again, coming to the point of the video, I'm going to be cutting out all the crap. I'm only going to be showing you what you need and what is essential, right? So for example, if you're using MT5, now with CTrader, I will quickly go over this as well. Now with CTrader, this was actually funding pips that I used for how to pass a phase 2 small 10k account, which I passed live trading. So yeah, but with CTrader, it's more modern, it's more easy to set up, and I'll be going through each one. Me personally, I use both. I'm just used to MT5, and with CTrader, I just love how modern it is. But coming back to the point, okay, there's so many different things, but what you can see here, guys, when you go, example, if you go to first, if you want, okay, we're going to break this down step by one by one, right? First, you have to sign up with the broker that you need to deposit the money into, right? That's if you're using your personal account. If you're trading with prop firms, guys, Funding Pips, FTMO, which I'm sure you probably heard of, all the prop firms that will give you access to capital, they will then on their dashboard give you the login details. Then you come onto this broker over here, you click on file, you click on open account, right? Login to trade account is already if you've already logged in, basically, right? Open account, come over here, and then you choose the broker that you signed up on Google. So in this case, let's just say with IC Markets, they already give you the exact login details. They will email you the login details, so don't worry. These are different prop firms. You can come over here, guys, and then you just basically click on the prop firm. So let's just say Alpha Capital Group, for example. Click on next. They will give you the login details. Click on here, login, password. They will provide you all these details. Server, they will provide you those details. And as soon as you click finish, it will load. And it should say, guys, trade at the bottom left. If it does not say trade, it means you've either entered your details wrong or something like that. Something's gone wrong. Here, guys, click on, these are the symbols that you need to trade, right? Click on plus. If any of your symbols are missing, just click on plus and just bring it on here, the one that you've been doing your chart analysis from. So let me just click on this, and so if we bring it back here, so you know, I've been doing the chart analysis for gold, XAU USD. So we go to MT5, and then I would need to bring XAU USD. Once it's up here, just hold on to it and drag it onto here and let it load. Right click, you can go on time frames, but if you click right click, only one you need, guys. Again, I can go through every single detail what other videos will do, again cutting out all the crap. You can just put it on 1 hour if you want to, whatever time frame. And then you need to basically see, guys, super important, which a lot of people make a mistake on. Does the 1 hour of this gold, candles match the 1 hour of the gold that we're seeing on here? So what I like to do is, if I just minimize this at the same time, if I want to just move this out of the way because, okay, perfect. Look at this, guys. So how I just like to, now don't pay attention to the price, these numbers here, they're normally a little bit off. I'll just like to keep it by looking at the candlesticks, right? So what do we see here? 3 bullish candles, or just say, let's say red long wick bullish candle rejection, and now it's a bearish candle. Let's go on to MT5 again. 1 minute, apologies. When you go on the 1 hour time frame, 2 bullish candles, 1 long wick rejection, bearish. Let's see if it matches now. Pretty much it does. 2 bullish candles, red. Mine are obviously, like I mentioned, blue and black. So yeah, it's perfect, right? So this is obviously, it matches. If I wanted to place a trade now, if you want to place a trade, guys, right, this is it. You click on new order, and then you would work out, now this is one thing. Now if you wanna avoid this headache, right, finding out the lot size, lot size, again, I'm going to explain this in a simple manner, right? Lot size is just a number, a multiplier, what you need to execute a position. So when people put huge emphasis on 30 lots, I place a trade with 40 lots, it doesn't mean crap. It doesn't mean anything, right? It's got no value. Now what I personally, so obviously you would look at, if you want to do market execution, whatever you wanted to trade with, you're going to click on market execution or pending order. Pending order, in again simple terms, is basically market execution is once you click buy or sell, it will execute the trade instantly. Pending order is basically you're going to, again, set your position. Let's just say you set the position down here. It's going to be a limit order, is basically where your trade is placed, but you can walk away from your computer. Again, I'm saying it in a simpler way, right? You can walk away, and if the market comes down to that area of interest where you want to place the trade, the computer will execute the trade automatically for you. Let's just say you without driving or anything, and then you will get a notification that your trade has been executed. It's basically that, right? Simple terms. Why should I go into so much? No, it's simple terms. It will pending order or a limit order. It's got, you can call it either way. It's just basically a automatic trade placement by the computer, and you do not have to be at your computer desk. Simple. So coming back to the point. Okay. So now that we got out of the way, now let me just tell you what I use, guys. Now I have no affiliation whatsoever, but I'm going to be only recommending you again what I use, what helps me on a day-to-day basis. I use, this is a Magic Keys calculator. Why is this super helpful, right? This is super helpful, guys. And obviously on the right side, guys, you're going to see all these prop firms that come up. That are, obviously you can just click on the account, double click on it, and it'll bring up everything. Magic Keys, is basically, let me just remove all this. Let me just, so it can be easy for you guys to check it out. Oops, don't know what's happening here. Okay, Magic Keys, once you've set it up, that'll be you can order it online. Just type in Google Magic Keys. What will this will do, guys? It will just work out the lot size for you, right? It will work it out for you. So if you want your trade to be a certain amount of pips stop loss or a certain amount of risk TP, so let's just quickly go over that as well, right? What is stop loss? And I'll save that for in the other chapters because it'll just go on too long. But then it's basically here you can see stop loss is 17, 18, 15 pips, whatever you can call it, 12 pips, and then TP is around this is gold, by the way. Now if I click on Magic Keys here, this little feature over here, this is 1% risk of the account size. I mean, look at all these features it's got, guys, right? It's an insane tool. You just I think, guys, it's only super cheap. It's about $30, something like that, the digital version. If you want to buy the physical version, it's more expensive. It's by Rajabanks, if those who don't know. I've had this for many years. I've never upgraded it. It's only $30, and it's been able to help me get 700k in funding. Absolutely insane, right? Super helpful. And again cutting out all the BS. Why should I teach you how to work out lot size in the most complicated way? I use this, so this is what I'm going to recommend. Again, no affiliation whatsoever. Super simple method to use. So I mean, basically, just another thing lastly before I close this, it allows you to choose how much account risk size you want to use. If I have a 100,000 account size. I can choose if I want to only risk 1%, which is $1,000 of the account size. So if I were to open this, open close, I can close half the trade, the full trade. I can close custom amount, 75% of the trade, everything. I can open the trade in a split second. I can close the trade in a split second. That's why it's so powerful. So this was obviously on MT5. On CTrader, it's basically the same thing. Once you go with a certain broker, there's so many brokers. Just type in brokers, trustworthy brokers on Google. Regulated brokers. Regulation is super important, and your money's protected. You know, you don't want to go with unregulated brokers. That's advice there. Take that, you know. And so once you get your brokers, guys, it could be anyone. IC Markets is #1 in the world, so I recommend it. Unless you're trading with prop firms. So just go on, also check out some Trustpilot reviews as well. Just be very careful, do your research, guys. But again, with the CTrader, what I like about this, guys, is once you've signed up with the broker with IC Markets or prop firms with through your email address, you do not have to log in. Remember what I showed you earlier, how to log in on MT5? You do not have to, this will automatically log you in. I mean, once you've logged in, all you do is right click. Obviously, I mean, the more time you spend on this, guys, you'll realize. But again, all you need to focus on, guys, is place a new order. You come onto here, guys. Actually, it's open on my top monitor. Okay. Again, now this is the beautiful thing about CTrader, right? This is why it's more modern. It's much better. With MT5, you need to work out. Unless you don't, and you don't. Let's say you don't want to spend money with, you know, magic keys. You don't want that calculator. This will already work it out for you. It's a built inside in feature. Super helpful, and it's for free. Insane. So here, let's just say, for example, on this 10k account, 1% is $100. I normally like to use a 5 pip stop loss for UJ. So basically, let's just say, see, it already works it all out, guys. So you can just click on these, you know, lot size, or on this side, here is called quantity. You can just choose, and you can see a move, guys. The amount of money you want to risk: 99, 98, 97. And once you just done that, guys, all you do is just click on place order, and you can place the order. Now here mine says account is disabled. Why? Because I've already passed. Once with prop firms, you pass their accounts, they'll disable your accounts. So yeah, that's basically the easiest way. And then once you place the trade, you know, obviously it'll come here on positions. You click on the X, will come here. Click on that if you want to end the trade, or if it hits your TP, hits your stop loss, vice versa. And you can check on your history of trades as well. And I mean, yeah, so you get full, you know, everything. It's all here, guys. Super simple. So that's for how to set up your brokers. Okay, guys, now that we've gone over the brokers, TradingView charts, we know how to play zones, you know, we know how to obviously read candlesticks a little, you know, to say the least. Now we've got all the jigsaws. We've tried to put the pieces together, piece of the jigsaw. Now we need to come up with a method, right? A strategy. Now we need a strategy, and I'm going to be showing you a strategy, guys, that I have been using myself, the break and retest, because it's, you know, it's like, you know, when you go to a war, when you go to the battle, you know you need a sword, you know you need, you know, a shield, you know you need all your protective gear. Now it's like, okay, do you know how to use them, right? So now what I'm about to give you is your sword, right? It's the strategy. Now your shield is basically going to be how you manage your risk and how you lose less every single time you lose a trade. That's going to be the shield, how you go on the defensive, right? So let's just start with this. Let's teach you how to wield your sword first. So first we're going to be starting off with the strategy, which I like to use, the break and retest strategy. And now obviously once you got your zones marked out, which you should have a pretty much good idea on how to draw now. Once you got your zones marked out, now obviously the break and retest strategy, basically, guys, what is it? So let's just, in simple terms, again, you can check on Google what it is as well, but I'm going to be showing you what I think of it. Price reaches the resistance level, right? And then it breaks through, comes back down, creates some kind of establishment, a support it gets established, and then continues pushing further up. Vice versa on the way down, when the market is coming on, you know, further down. Zone marked, breaks through, comes back up to retest. Now I want to make something very clear as well, guys. This is a strategy I used to use in the beginning. My students, if any of them are watching this, you know, which in a sense they should not be, because this video is only for beginners, and I don't work with beginners, right? My unlimited one-to-one sessions, they are not for beginners, they are for some experience. So they would know, if anyone is, you know, wondering upon this, has come across this video, my students will know instantly. This is not the break and retest I personally teach. Mine is a more refined version. This is what you're going to see in a textbook. But the only reason I'm putting this out for free, guys, a lot of people sell this as a course, which annoys me, right? They're just conning the public. So we're going to be growing for the break and retest. Again, you can check on Google, and I'm going to be showing you entry methods, everything, and then I'll be making the next chapter on risk management, how you can lose less. We're going to be speaking about stop losses, TPs. I'm going to go over then another chapter on edge, how you can, you know, have that advantage over the market. One is having a strategy for the market. Number two is having an advantage over the market, right? So you can always stay one step ahead. But some people argue the market's always winning. Well, if you're making profit, then in a sense you're winning, aren't you? So I will leave it as that. Now, okay, so coming back to the point. So now we've got to look at, guys, once the zone has been marked out, where do I see areas? You need patience as well, guys. And there'll be another chapter speaking about psychology as well. So we'll be going on to it one by one. So on this one, guys, we're going to be like, okay, where do I see, once my zones are marked out, where do I see breakouts every single time? So I'm looking at this, guys, and breakouts, one breakout is here. Zone was here. This candle came up and broke through it. Another breakout was this one. Let me see. Okay, another breakout was here, but that's why I marked as a loss, because if you would have gone for the buy, you would have lost the trade. Why? Market starts coming back down again. Let me see, another one here, a nice breakout. Now someone might be watching the video and be like, well, why have I gone for a buy over here? There's no breakout. Yes, but this is obviously consolidation, and the reason I got this habit when I just put this here, why? Because in my own personal trading as well, when normally there's consolidation, I like to just take advantage of consolidation, because market just going in zigzags, ping-ponging. So for this video's sake, obviously once you've gained more experience, but obviously this is a video for beginners, I'll just remove that particular one. Here we can see a breakout and price comes here, boom, straight up. Let's just say here we get the breakout here. Now this is a late retest, guys. This is a very late retest. So for this video's sake, I'm going to remove it. We're going to be super strict. This one is a breakout, but again, you know, we want to be focusing on this price. Look at this, see? You got to look at this. Is super important to look at past data. Again, perfect. Yes, so this is a breakout. Price comes up, so I can even clone this and put it down here. Okay, so we get the idea of the breakout. Now, what is the retest? So once we get the breakout, am I just going to take my entry from up here once it closes? No. Now's the hard part. Now this is what people mostly struggle with. Now I'm going to wait for price to come back down, right? To come back down to this yellow box, yellow zone, this particular zone, wherever, you know, you could color your zone any color you want. I'm going to wait for price to come back down, and now I'm going to wait for some kind of a rejection, some kind of price action. Now again, coming back to candlestick patterns, remember what I said? My favorites are the engulfing candlestick pattern. Let me see if I actually got it here so I can bring up candlestick patterns. Remember, the bullish engulfing, bearish engulfing, tweezer patterns. I don't use the morning star, evening star. I like to use the engulfing pattern. So we're going to be focusing on that only. Oh, sorry, the pin bar as well, the long wick rejection ones. I'll be going into that anyway. Okay, so let's just say for in this instance, you know, look at this evening star formed, but it has no value. It's formed, it's giving me a bearish signal, but above the zone. So it's got no value, right? So let's just break this down even more. Have I got any pattern? Beautiful, bingo, right? What do you see here, guys? A bullish engulfing pattern here, right? It's formed above the zone. Now I can take my buy, right? Now I can take my buy. But again, am I just going to take the buy just because it's a bullish candle form? No. Wait for price to then come pretty much closer to your zone. If you're going to do it somewhere, put these, you know, the key tip here is, guys, always try to have your stop loss. You know, some people say have it below the wicks. Well, once you gain more experience and collected that data, then do that. in the beginning, have it below the zone and at a comfortable level. The best way is the safest way, because in the beginning, guys, you want to increase that win rate. Why? Because you want to build that confidence. If you have the confidence, you need that confidence, especially in the beginning of your trading career in 2025. Especially, confidence is key, because when you start getting knocked down a little, only confidence is gonna, or how can I say, it's gonna give you that boost, keep you hungry, right, to move on, and just weather the storm basically. So below the zone, and if you mark it near the previous highs, you can just basically put it there. So now obviously got my, and basically if anyone asking what the hell did I mean by previous highs, just call it simple terms, the previous highest point where price was currently at before it broke the zone, right? Remember that, rewind that if you want to hear that again. So yeah, basically that's how you want the safest way to mark your stop loss. So we got the engulfing pattern, right? Now here is not a bullish engulfing pattern, but there is something here. Remember what I said, the single candlestick pattern, a pin bar, not the best example here. This is what some people call this a tweezer pattern. Look at this, a bullish long wick rejection, no hardly any wick at the top. You wait for price then to print the candle, wait for the price to always come down a little bit of the previous candle retracement. Now you can pretty much have it below the wick of this candle, because it's also below the zone as well, and then it would give you a nice amount of profit, hopefully. It doesn't have to win always 100%, but this will give you an example, right? So we've got the break, right? We've got the break, and now we've got also, prices come down to retest and prices headed up. So in this moment of time, if I was risking 1,000, I would have made $2,700 right now on a 100k prop firm account, or your personal account, wherever the balance, whatever it is, I would be running in profit. So that's basically the strategy, guys. Super simple. You can try out, if you ask ChatGPT, mention a few strategies, he'll give you a list of, ChatGPT, I don't know if it's a she or a he, but it'll give you a list of 100 strategies, thousands maybe, I don't know. But the most simple, I've tried out every strategy. Again, speaking from 10 years, 8 years of experience, trying out everything under the sun. But what's made me a 700k funded prop firm trader, again with all these certificates, these are just two. This is not even nowhere near all my certificates. This is just here to give me, every time I sit at my computer desk, it boosts a little bit of confidence and morale. So especially for those days of a little bit of drawdown, it's just part of it makes me keep my chin up, held up high. So anyways, coming back to the point, I would recommend reading books as well, trading books. The Best Loser Wins, highly recommended, by Tom Hugard, The Disciplined Trader, and Trading in the Zone by Mark Douglas, super highly recommended. So it goes on and on. But yeah, this would be a profitable trade right now. So this is on the strategy, right? The break and retest, what I show. Obviously, again, I want to make this very clear. This is not the exact break and retest I show to my students and I use myself. Mine is a more refined version. The zones are much stronger, much cleaner. My entry method is totally unique. It's different. So yeah, do not be just, I use the break and retest, but not this break and retest. I want to make that very clear, guys. So okay, now this is for the strategy. Now let's move on to the next chapter, which I want to be covering over, stop losses, TPs, and edge. I want to be speaking about edge as well. So let's continue pushing this forward. Okay, guys, now that we've spoken about strategy, now let's go over to risk to reward, right? And why it's so important. We speak about win rate as well, and I'm going to be speaking about edge as well. So let's start with risk to reward, right? So basically, what is risk to reward? So every time, basically in simple terms, and again, I want to be speaking about, that people have different kinds of risk to rewards, by the way. 1-2s, 1-3s are the most notorious ones, what pretty much everyone likes to go for, pretty much. Me, on the other hand, I like to collect my data, and I like to go for much bigger risk to rewards, like 1-3s, 1-4s, 1-5s, 1-6, 1-7, and I just let the market, run. I just basically, it's like, why should I leave money on the table, right? And if I can, one of the things that I don't like to see, if I was to go for a 1-2, and trust me, I've done this, or a 1-3, but then the market falls to a 1-10, there's nothing. It's even though there's a term in trading that trade like a robot, but at the end of the day, guys, trust me when I say this, it's very hard to do. But I don't care. At the end of the day, I'm human, and when I see something like this, it still hurts, right? And what is risk to reward? so this is a 1 to 10, right? Here you can see this 10 number 10, 10.6. So if I was to put $100 on this trade, so you got to times it by the number that you see over here. I would get back in return $1,600 in profit, right? So that's basically the idea. So let me just put it a little bit lower to 1 to 11. So if I, pretty much 1 to 11. So this is my stop loss here. If price leaves this red box here, I would lose the trade. And you see how small it is. You want to give the market always a little bit of a breathing room. But once you gain more experience, you'll know especially from backtested and collected data, you'll know how much you can get away with. So here, 200 points. What normally I like to use on my students. Fit with gold. I don't trade gold. I trade USD JPY and GBP JPY are my breadwinners. So for this particular example, here you can see a 1 to 11. This example here is a 1 to 4. In this case, this would be a losing trade, but obviously if I went to a small time frame, it'll be showing a there you go, it's a winning trade. Why? Because we get the break, we get the retest, 1 to 4. So I'd make $400 if I put on $100. Why when people go for 1 to 2s, 1 to 3s, why should I risk $100 to make $200 or $300 in profit? And I'll tell you why that is important, to have a decent size. I'm not saying have an insane amount of risk to reward, but if you basically have, let's use the theory of the coin toss. So here's an example, right? We're going to be comparing our risk to reward to this. Suppose you take 10 trades. I've got 10 coins over here. Suppose you take 10 trades, guys, and let's just say a trade has an outcome of a 50-50 rate, right? Whether you're going to win or lose, it's got a 50-50 chance. So I've got 10 trades over here. Now imagine, let's just flip. Now imagine your risk to reward is a 1 to 2. That means you would need to win, around 50% of the trades to become profitable. Does that make sense? So let's just say I flip the 10 coins, right? Let's just say a heads is a 1 to 2. So I made 200, for every 100 invested, I make 200 profit. I made 200, 400, I've lost these two. I'm back down to break even 0, right? I won 400, I've lost 400. Because every time I win 200. And then every time I lose, I lose 100. So if you look at it now, I'm up 200. Again, now I'm up 4, 6, and now 800 in profit. Back down to the 1. I lose 100 again. Now I'm 700 profit. I win 2 again. 900 profit. I lose 1 again. 800 profit. So overall, I've got a decent amount of profit. So let's just see what the win rate was. 2, 4, 6. I won 60% of my trades out of the 40% I lost. If I lost 4 trades, I won 6 trades. So I still walk away with a nice amount of profit. Now imagine what I go for normally is like a 1 to 4. So that 800, you double it now. Right? Oh, actually, let's switch it. Sorry. 1 to 4, 800. I've gained 800 profit. I lose 200 here, 100 each. Remember, I lose 200. Now I'm 600. I win 800 again. That's 1,400. Another 400, 1,800. I lose this 1,700. I win 400 again. 2,100. I lose 100 again, which is pretty much called it 2,000. I think I've just but you work out the math there, guys. I don't want to repeat myself pretty much, but yeah, I just got my mind just went blank then for a second. But yeah, so basically, but you can see there's a significant amount of difference in profit from, I think the first one 1 to 2 was 800, but then a 1 to 4 was around 2,000. Normally you'd think, okay, from 800 it should go to, basically 1,600 if I'm doubling the risk reward. No, it's quite interesting the way the numbers change significantly. So that's why I have basically a bigger risk reward, and that's why it keeps me longer in the game and it gives me that advantage. Now me personally, and now what is the number one reason though why you want a bigger risk reward, guys? Right? My personal reason is I have to win more, right? If I go have a 1 to 2 risk reward and I lose 5 trades in a row, psychologically that's going to have a huge impact on my psychology, of course, right? But if my risk rewards are much bigger, I can lose even 5, 6 trades, knowing that one trade can cover everything. Look at this 1 to 5 here, one trade can cover 5 losses, or even this 1 to 13. I mean, it can cover so many losses and just skyrocket me into profitability. So that's for risk to reward, basically, and that's why it's super important. Your win rate doesn't matter, guys. You could have a low win rate, but your risk to reward is what matters the most. Now, so that's basically, you know, for risk to reward, right? So now I want to be speaking about, guys, you know, this chapter now, we're going to be speaking about edge. After you got all this applied onto the markets, what can give you a huge advantage over the markets, right? The best thing that's going to give you advantage over the markets is how you manage your risk and how you apply, what kind of different types of edge that you apply, right? So one edge that you can apply, guys, is when the market is trending, right? I'm going to be speaking about risk management, how you can lose less and win more. But one edge you can apply, guys, definitely is, you know, market volume, momentum, and also basically where the market is trending. There's a phrase in, you know, trading is called the trend is your friend. What that basically means, guys, is you want to where you've gone a bigger time frame and check which direction is the market flowing, which direction is the river flowing. Can you guys tell me here? It's bullish. The market's moving higher and higher, right? So as you can see, the market is moving higher and higher. So what do I mean? All you gotta do, guys, zoom out on a bigger time frame, draw this like this, just get a line, draw a, you know, diagonal, and it will just tell you if it's bullish or bearish. So as you can see here, the market is pushing higher and higher, going, you know, the buyers are in full control. What does this basically mean, guys? Now imagine this is a river, right? Let's just grab a line from the toolbox, one of these. Okay, imagine this is a river, and in this case this river is flowing upwards. Now you tell me, guys, do you want to go for sells or do you want to go for buys? What do you think is going to happen? Is it going to be, because this river is flowing upwards, is it going to be easier for you to swim up the stream, up the river, or fight the force and try to swim down the river, even though the tsunami is going upwards, right? The obvious simple answer, guys, is if you take buys, if you go in the direction of the river, you know, it's going to be much easier. Imagine when you're running down a hill, right? If you notice, you start to run much faster when you start running down a hill, right? It's like you're getting some kind of, you're like you're running 2 times faster. It's much harder to stop. You want to be, that's your edge, right? You have an edge over someone who might be just, you know, running on a straight road. You know, it's maybe, I'm not probably the best example, but I hope you understand. In simplest form, trade with the trend, trade in the direction of the market. If the market is going up, you want to be only taking buy sells, you know, for good. That market is going to continue pushing up. If the market vice versa is on its way down, you want to be focusing on sells. Sell the market, right? Go with the trend. Your sells are going to outweigh your buys. No matter where you take buys from, there will more chance of getting hit by with the stop loss, or more chance of you losing the trade. So in this case, this is your edge. That's one edge, right? Now, how you can use risk management to your, let's move on to, you know, obviously volume, you know, these are different kinds you can obviously apply to your edge, but you can, I'm going to be teaching now, guys, one of the most important ways that will keep you longevity in the markets. I'm going to be teaching you different methods how you can lose less and win more. Normally people think what this means is I'm risking 100 to make, in this instance, let's just say, let me just drag you all the way up, 1 to 10. So I'm risking 100 to make 1000. That's my edge. Yeah, it is an edge, but in my eyes, and again, I'm going to be only telling you things that I personally use myself, it's a very small edge, because you got to think, guys, right? What do you want to do something that, now we've covered, you know, the strategy where I was giving the example before, you know, when you go into war, you know how to wield a sword now, right? You know how to, I've given you the sword, now you know how to wield it. Now I'm going to be showing you, I'm going to give you the shield and how to go on defensive mode, right? This is a edge, yes, I admit that, but it's a weak, like, it's not the, it's a, all edges are great, but in my eyes, they're a medium level edge, high level, strong edge, and even a weak edge, right? This, in my eyes, is a simple weak edge. I mean, a 1 to 10 is quite insane, but how often can you even hit these 1 to 10s, right? So what I like to do is, again, collecting data, What do you see in some of these trades, guys? Let's go on a 30-minute time frame so you can see much, what do you see in some of these trades when you take some of these entries, right? Well, I can see in this one over here, and I'm going to give you an example, right? You can see this trade over here, which is entry would be over here. This particular trade never goes into drawdown, right? So one method you can use, guys, as soon as you take the entry and you're risking $100, move your stop loss to halfway point. And I've done this many times. Move it to halfway point. So if it does hit your stop loss and you lose the trade, right, you only lose $50. Even though you're risking 100, you only lose 50. Now, why is this powerful? Because let's just say in this instance here, obviously, which it did, the market goes straight into profit. I win 1 to 6. I win $600 in profit. But if I would have lost the trade, I only lose 50. So now this 1 to 6 is no longer a 1 to 6. It's a 1 to 12 risk to reward, right? I'm leveraging that 1%. I'm taking full advantage of that 1%. But when I lose, I only lose 50. So let's just say here, I've lost this trade here. Obviously, this would hit my 50. I would lose this trade. I would lose this trade that's marked in orange. I would lose this trade. I would lose this trade as well. Actually, let me see. We're going on a smaller time frame. Would we actually lose this trade? Well, there's no breakout here actually. Sorry, there's a breakout, but not the best breakout and not the best. There is no retest, so I'll delete that one. But all these trades here now. Watch this. How powerful this is. Suppose I lose all these trades, right? Suppose I've lost all these trades. 1, 2, 3, 4, 5, 6, 7, 8. I've lost 8 trades, right? Let's just say I've lost 8 trades. Now, because this is a 1 to 12 now, right? I only need a 1 to 6, risking half, and only this trade never went to drawdown. I've just covered all them trades and much more. So what was this? What was the total here, guys? Was it 8 trades I lost, for example? 8 trades I lost. This was a 1 to 12 risk to reward. Now I'm still up 4%. Sorry, 4 RR in profit. How powerful is that? And if I find even another trade that never went into drawdown, look at this. Another one over here. Insane. This one. If I just draw it correctly. Again, look, it never goes into drawdown, right? And how much if we run all the way? If we were to call this the full way, another 1 to 10, which now it acts like a 1 to 20, guys. Because I'm not losing 100 anymore. I'm losing 50 every time. Because I'm bringing this, as soon as I enter the trade, instantly move it to halfway point. And it's a 1 to, well, in this case, is a 1 to 16. And so 1 to 16, guys. So does it even matter if I lose my next 7 trades? Does it really matter? No. That's an edge, a very, very strong edge. Now, another method I could use is, let's just say, on average, I use 200 points, which normally gives me a 1 to 6. Start off at 400 points, double it, right? Risk the 1%, move it to instantly to halfway point. And what does that do? Right? This is the original stop loss size. I moved it back to the 200, but I'm still losing half because this time when I entered the trade, it was at 400. I doubled the size of my original stop loss. Right? Watch this video backwards, guys. You'll see and watch it. And, even feel free to drop comments. I'll answer your questions, or join the Discord community. You can message me one-to-one. I'm more than happy to help. So, yeah, basically that was the idea and, super simple. Now, the third method, which you can do, and there's so many videos on my YouTube channel, guys, where you can check it out, is every time it goes 25% into more and more drawdown, what you can do is keep removing 25% of the trade. So every time you go 25% into drawdown, remove 25% of the trade. If it goes up to 50% or into drawdown, remove 50% of the trade. So again, if I bring up this tool here, the calculator from Magic Keys, just write magickeys.com. I can do close custom, which I can go in my settings, and if I go my broker here, I can just click on this. Basically, I can choose my settings, and I can say every time I click on close custom, just remove 25% of my position. And by the time it hits my stop loss, I've already removed half of my trade. How insane is that? And why is that powerful? Because let's just say from even halfway point or 50%, 75% point into drawdown, it comes back up. I still will at least cover my little bit of loss at the beginning or gain more profit. So this is how you lose less and win more. Not by, I'm risking 100 to make 600, I'm risking 100 to make 1000. No, the art of losing less and winning more is how you handle your live trades, live positions when you're in drawdown. That is the real skill, guys. That is the real true edge. Now, obviously, that's for edge, guys. I don't want to make this video too long, and let's move on to how to trade with prop firms. Now, in this chapter, we're going to be speaking about prop firms, guys. So what are prop firms? Prop firms is basically, guys, for those people who, I've utilized these myself. Prop firms are basically companies, guys, if you've not heard of them, companies that will, when you give them a small fee, they will give you account sizes where they will, you can pay $500, or even, start from 10K, $500 for a 100K account. And you got to pass their 2 stages verification. Then they will give you not real money. It's not real money. I want to make that very clear. They've got these drawdown limits. So let's go for what I believe is the #1 in the world, FTMO. Let's click on FTMO. So you can see if this is obviously a huge list of prop firms. There are, the discount, options as well you can get with them. So let's see if it loads. But even if you just click on www.ftmo.com or just want to Google and type in FTMO, the ones I would recommend, guys, right now is the 5%ers and FTMO. The others I do not recommend, and you might see all these other YouTubers doing. I have no affiliation with these guys. I want to make that very clear. The other guys that you see on YouTube promoting them, you want to check out their reviews as well, guys. So with FTMO, and I would recommend going with prop firms, guys, with the highest amount of, I've been in the longest amount of years in the business. So what we'll do is let's go on Google. Let's go on Google and we'll type in, FTMO is already here. It's already saved over here, guys. So let's click on FTMO. So this is basically, I've signed into my FTMO. Now, obviously, this is what you're going to see, guys, when you come to, it's going to give you the option. It's going to give you the option to purchase their account size. I don't want to scroll too much further down, guys, because it's got all my personal information. But it gives you the option, guys, to go on, if you want a 200K account, 100K account, and you can choose the broker that you want it with. And then they give you the login details, and if you scroll to it, it'll give you you got to pay a small fee, guys, which go with them. And if you even click on Leaderboard, as you can see over here in Leaderboard, these are people with who are waiting for withdrawals. There's some guy, Florent, obviously I'd recommend you don't aim for these leaderboards. They just waste where you can blow your account and fail. Trade comfortably, take your time. This person here has got a 500K account with the FTMO, #1 in the world, and they're waiting for 121,000 in profits. Absolutely insane. So yeah, this is who I recommend, FTMO, and you can try it out. Pay a small fee if you don't have enough for your personal accounts. And again, coming back to these guys over here, these guys will recommend you all the prop firms. Great reviews, highly respected. Yeah, check it out with prop firms. And that's basically the one step where you just deposit your own money into IC markets. And again, check their reviews. They've got like 30,000 plus 5-star reviews. IC markets. You can do you want to again go with a regulated broker, and these are the guys you want to put your money in with once you know what you're doing, once you learn the skill set, and that's basically the idea. So yes, let's move on to the next chapter. Now, this video would not be complete, guys, if I did not touch on trading psychology and the importance of understanding, guys, that if this is a financial market where losses are going to happen every single day, all right, it's part of the game, and it's going to have a huge impact on your psychology. This is not for the faint-hearted. It's not for everyone. But if you believe like this, I would recommend these trading books. I would recommend it on Amazon. There's so many books, guys, you can get by Mark Douglas. You do your own personal research as well, and trading is going to be one of those fields where you truly learn about yourself. Your psychology has to be on point. You have to be on your A game, guys, day in, day out. And the reason I'm saying this, because once you've even learned everything, right? I've tried to go through everything. This is the first time I've ever made a video about beginners trading, for beginners trading for 2025. I thought it was a new year. I was getting a lot of demand, a lot of responses, messages, please make one for this. So make for one for beginners. Why? Because for one-to-one, my unlimited one-to-one mentorship sessions, I don't take on beginners. So I thought, there's never a need to make one for beginners, right? There's enough content out there. But then I start watching through, after I start getting a lot of demand, I start checking out everyone's videos, and I was like, it's a simple, basic information, but it's not filtered out, right? It's not sorry, it's not filtered to that sense where they'll speak about candlestick patterns, but they won't say that they use it for their own strategy, which particular ones. They'll speak about zones, but not exactly how they draw the zones for themselves. They'll tell you what a zone is and what a textbook zone looks like, but not how they observe and analyze and break down the markets. They don't, when you're looking at example, they might tell you what a risk to reward is, but they won't tell you how much risk to reward they use. There's so many, it goes on and on. They'll, talk about prop firms, but then not talk about what prop firms they're with, how much, everything, right? So this was a video on full transparency. Again, if those who do not know, if you already see my intro, my certificates in the back, let's just say even this is all garbage, right? I just say this has no value. I know this was supposed to be a chapter on psychology, going a little bit off track. But again, if I just even take you to, here, Discord community, again, this is my students, and obviously my certificates that I posted as well. And why I keep showing this, guys, this is obviously the elite section, elite mentorship. This is obviously where all the elite students are. But the point I'm making is, guys, my strategy, my methods have zero value. I can boast about it as much as I want. They only have true value if I'm able to make someone else profitable. So my student, one of my students that I've shown was number 4 on the FTMO leaderboard, almost 400k funded. Another, the student goes, the list goes on. One is, few are now 50k funded, few are 100k funded, and quite a few on my personal messages I get, which I do get quite a bit. Not everyone's posting on in the mentorship because people are quite discreet, and I respect that. But they do send me, on the personal messaging, they do personally DM me and tell me how they get on a day-to-day basis, and the results, are great. And obviously, still some students are learning. Everyone has their own pace of learning. I'm not the smartest guy in the world. I have had some students that it's taken them a few weeks to pick this up. Some students who have taken literally 3-4 days to pick this up, right? So it's absolutely insane. But again, coming to the psychology, again, I'm going to be speaking about, guys, is that trading is going to be those things where you're going to be losing all the time. You're going to be winning. There's another student with this, again, not everyone shows their payouts. This particular student is showed one of his payouts. But again, coming to the point, guys, is you're going to be winning all the time, losing all the time. Again, your risk to reward is going to keep you ahead of the game. But again, most importantly though, win rate don't matter in this game. If your head is screwed on, and another thing that I advise as well, guys, don't 24/7 think about the markets. Do not think about 24/7 about the markets. Think of it as a 9-to-5 job. Well, no, don't think it was a 9-to-5 job. It's the less you trade, the better, right? What I'm trying to say about a 9-to-5 job is when you come back from work, and right, do you continue thinking about work? Oh yeah, I can't wait to get back to work. Can't wait to do this. No, you don't do that, right? As soon as you leave your computer, forget about your trading. Move on, right? And the reason I've come in front of the camera again for this psychology video, because I want to speak and look at you, and I want to speak about psychology, guys, is with psychology, it's you gotta get burnt to learn. Well, that's 100%. The chance of you becoming successful without blowing any money, I'm sorry, it's worse than a needle in a haystack. You are gonna get burnt, guys. So with psychology, do your research, ask around. Join the free community. It's a free community as well, guys. Obviously, the paid mentorship, that's different, but join even the free community. Tons of questions you can ask, and there's lots of answers, and more than enough people happy to answer, including myself, for free. So become part of a community. It doesn't even have to be this one, guys. Join someone else's community. Don't do this alone. If you do this alone, guys, it's going to become very depressing, very frustrating, very boring, very stressful. Don't do this. Go at this alone. Psychology is one thing that's gonna your trading strategy, and it took me a long time to understand this, guys. My trading strategy and risk to reward and my edge, everything, that was just the foundation, right? Now I know in most of my videos I do say 90% is strategy, 10% psychology, but the weight of that 10% is so much that don't underestimate that 10%. It's super powerful, that 10%, right? That 10% still is enough to destroy and end your trading career. Work on your psychology, find out where you're going wrong, and you gotta have to understand, guys, without proper trading psychology, the whole ship sinks, right? Work on FOMO, work on why you're losing, collect your back to get your data, right? Super important. That's going to be the last and remaining chapter on backtesting, the importance of it, how you can add it, then collect data, how you can work around it, and build that confidence to trade. But regarding psychology, guys, there's FOMO, there's stress, there's fear of missing out, there's, I already mentioned FOMO, there's fear of even entering a trade, there's when you go on tilt mode, you start revenge trading, over trading. Keep everything to a minimum, guys. 1 or 2 trades, stop thinking about trading, that's it, you're done for the day. Simple as. So yeah, let's move on to the last chapter, backtesting. Okay guys, if you've been watching my video till the end, I've left the most important part till the end of the video. Without these 2 things, well, thank you very much for first of all giving your valuable time for watching this full video, and it just increases your chance of succeeding, right? So, and first of all, if you found value from this video, guys, so far, like, subscribe, comment, share, everything. Now, the last 2 things, what I'm about to tell you guys, without these 2 things, you got 0% of succeeding in trading. 0, not 1%, not 5%, 0. What these 2 things are: journaling and backtesting. And I'm going to be showing you how exactly I do this. So GJ, this is going to use GJ for example. I don't backtest as much as I used to. Now I'm going to use because I've already collected my data. Now this is a UJ. Remember, I'm on the 6-hour time frame. So you can imagine each candle represents 6 hours. How much data I've collected. And if you've been watching my other videos, guys, I always show this because I'm just trying to show guys I didn't just wake up to become a profitable trader. I put in the hard work. One blue line to blue line is 1 week. One red line to red line is 1 month. You can do the maths over here, guys. It goes on and on. Now, did I just stop here? Now, I've been working out on how often does my winning trades pattern set up, at what time, what particular session, everything, right? Breaking it all down. I didn't just stop here. Once I collected all that data, I put it onto Excel. Now, what do you see over here, guys? Here is the date, time, and over here, obviously, you can see the orange days is just minus 1%. Placing that 1 trade, I'm out of there, right? At the particular time, and then obviously the duration of the trade, what candlestick patterns were forming, and I've obviously put the links down as well. And it just I've obviously refined it, changed a lot of this, and then that's what I've just shown to my students. But as you can even see here, guys, my winning setups would give me around 8 to 10% profit in 1 trade. Yes, you're seeing this correct. And what you see, what I just showed you, my backtested data, is what you're seeing, basically is what you're seeing in that backtested data on TradingView. Here is gaining 10% per trade. Now, obviously, will my live data be exactly as my backtested data? No. Why? Because there's emotions involved. Some trades there'll be, but obviously that's in my, in my live journal, which is over here, live daily journal for my GJ. That would be there. So that's where I would post it over live trading. So that's, and obviously I've got my A+ setups where I know that which setups have the most highest chance of succeeding. Here I just marked out at the end of the week how much profit gain there would have been, if I followed the method to the T and like a robot with 0 emotions, like I mentioned it. But even, do I want 50% at the end of the week? No, I'm happy with 5%, right? And that's basically, look some trades here, 6%, 17%, 28% profits at the end of the week. And again, we go to winning ways. Now this is June. As you can see, all these blue numbers here, this is the amount of trades: 127, 128. Now look how much data I've collected, right? Start from 2022, remember. It goes on to about 500 trading days worth of collected data, pretty much. And then yeah, so this is 2023, and then obviously this is marked up as in blue. This was start of new year, the 1st of January. And then I just stopped backtesting. Yeah, I just stopped backtesting. I gained enough of my data. It was about 2 years of data. I collected my data, and then I have, obviously, this is my backtested data, and then I apply it to my journaling. I don't want to scroll. There's a different section here for journaling, but not on this actual file of on my Excel. It's a different section where I post my winning trades, losing trades, everything. But the point is, guys, these steps are super necessary for you to become profitable. This is on GJ, as you can see here, and that's basically if you want to succeed in this, guys, without doing these 2 things, the whole ship sinks, right? Backtesting here, which you can do on TradingView, backtest, If I just clone this, which is not giving me the option. Now, what do these things, guys, you know, why are these so powerful? Why? I'll change the color of this one, because if I just show you something, one happens before you ever start trading. The second happens after you have finished your trade. So one is before you're trading, one is after you're trading. You need this information to become successful in this game, 100%. If this vanishes, let's just say if this one, right? If you don't have this backtesting data, right? How would I know what my stop loss size is? How would I know what my TP is? How would I know how much, you know, should I, you know, how many trades should I take in a day? How would I even know when to trade, right? London session, New York session, what time of the day? How would I know that? And what does that lead to ultimately? It comes back to psychology. You're going to have fear of entering the trade. You have zero confidence. You don't know what to expect. Would you, how can I say, like when it's like when in boxing, fighters watch the videotapes of their opponents so they know how they fight, right? Or are you going to enter the ring with zero data on the markets? In this case, the market is your opponent. You don't even know what data to collect and how to collect it, and you want to trade? Absolute lunatic. That's being an absolute lunatic, to say the least. You know, to say the least. If I did the same thing, I've done this, and I was, you know, why should I speak about anyone else? I'll speak about myself. I was a complete lunatic. Again, the most boring. But people never do this because they normally find this one, especially they find this the most boring of the whole trading, their whole trading career. They find the journal part most boring. But trust me, once you make it work, it becomes enjoyable as well. You know, I find enjoying it, you know, because I like to see where I went wrong, and I like to dissect. And then once I find out the mistake, I'll be more excited for the market the next day. You know, win or lose, that's a different story. But I'd be more excited to, because I'm a bit of try to be a bit of a perfectionist. I like to become better and better every day. So yeah, here's a journal. Now, why is this important? Once you lose the trade, it's super important to know why you lost, how you lost, you know, and what are your ways to improve. Just the way, again, boxing example, if a fighter loses a fight, I'm sure he's going to watch his fight that he lost and how he could have improved, right? Any sportsman would watch their previous performance to see how they could have improved, and just like any sportsman, they would watch the footage of their opponent to see how they can capitalize and have an edge over them when they come. And in the middle, guys, let me just put this in the middle. Actually, let's put one for the middle. What is in the middle? What do you think's in the middle, guys? Live trading. Well, I should say live trade management, right? We'll call it this one green. And that's basically what trading is, guys. Backtesting, live trade and how you manage it, your stop loss, and journaling, how you can improve, and then how you come the next day. And obviously once you've collected all your data, then this goes out of the equation, and then it's just on a day-to-day basis, just these two. I hope you found value from this video, guys. I hope nothing. It's a new year, 2nd of January today. I thought to get this video out there for you guys. Never made a video like this before, so you know, I hope you found value. I wish you and your family nothing but the best, infinite blessings. I wish you a prosperous and a profitable trading year. Take care. Thank you very much for watching. Like, comment, subscribe. Take care, and like always, I'm out.